Most investors right now are waiting for certainty before they buy anything, and I understand that feeling. But here's the hard truth. Certainty never comes. By the time everyone agrees a stock is safe to buy, the real move has already happened. The investors who actually build wealth are the ones who do the work early, understand what they own, and get in before the crowd catches on. Today, I'm sharing 5 stocks worth serious attention in March 2026. And by the end of this video, you will understand not just what to buy, but how to think about each one like a long-term investor. Stay with me. Welcome to Market Authority. This channel helps you think better about money, markets, and long-term investing. We do the research and break it down in plain English so you can make confident decisions for yourself. If that is what you are looking for, subscribe right now and hit the bell. New research every week. Now let us get into it. Before any stock names, let us take 60 seconds on the market environment, because context matters just as much as what you buy. March 2026 is a consolidation phase. The market has had a strong run and is now pausing, rotating, and waiting to see if the big themes of this year, AI spending, defense demand, consumer recovery, actually show up as real revenue. Consolidation periods are not something to fear. They are one of the best environments to find value. When markets are choppy, emotional investors sell things they should not. Prices drop below what a business is actually worth. That is exactly where patient investors make their best moves. Find strong businesses trading below long-term value. Own them long enough for the market to figure it out. That is the whole game. Now let us go. The first company on today's list is a semiconductor business, but not the kind most people think about. This company is solving a problem that is quietly becoming one of the most critical bottlenecks in modern AI infrastructure. Think about what happens inside an AI data center, thousands of processors communicating at the same time, passing massive amounts of data in milliseconds. The traditional method, electrical signals through copper wires, is hitting a physical ceiling. Heat, interference, and signal loss become serious problems at the speeds AI demands. The solution is to move data using light instead of electricity. Lasers. This is called photonics, and it delivers higher bandwidth, lower latency, and far more capacity than anything copper-based can offer. There's a company building exactly this. Advanced compound semiconductor manufacturing that enables photonic performance for AI applications. I want to be fully transparent. This company is pre-revenue. Commercial sales are still early. Earnings are not yet a reality. This is the most speculative name on today's list, but the technology has been validated. The balance sheet is healthy. Domestic manufacturers are coming onto their platform. Analyst sentiment is building. The photonic space has already produced enormous gains for early movers this year, and this company has not had that jump yet because the commercial ramp is just beginning. That window between early traction and broader recognition is where the best returns are made. That company is Illuma. For investors with patience and a tolerance for risk, it deserves a close look right now. Drop a comment below if you have been following the photonics space. I want to know what you think about where this technology goes from here. Now let us shift completely. The next stock has nothing to do with semiconductors or AI. This one is a consumer brand, and the reason it is on the list teaches one of the most important investing principles you will ever learn. Price and value are not the same thing. A stock can fall 50% and still be expensive if the business is breaking down. But it can also fall 50% and become one of the best buying opportunities of the year if the business is solid and the market simply overreacted. The skill of value investing comes down to telling those two situations apart. Think about a cosmetics brand positioned right in the sweet spot. Not luxury, not bargain bin. Just quality at an accessible price that regular people actively choose over more expensive alternatives. That kind of brand has real staying power. Over the last year, this brand got hit hard. Tariff fears pressured margins. A couple of product launches missed elevated expectations. The stock dropped well below what the business is actually worth. But here is what the fundamentals say. The tariff impact was far less severe than feared. Underperforming product lines are being fixed. Their newer brand Road launched in Europe with strong early reception. The most recent earnings guidance came in aggressively above analyst expectations, backed by new launches and continued market share gains from legacy competitors. Analyst sentiment is recovering. Free cash flow is intact. That company is e.l.f. Beauty. At current prices, it offers both a margin of safety and a real growth runway, a combination that does not stay available for long. Stay with me, because the next one is a story we have been tracking on Market Authority for a while, and the biggest moment is arriving right now. This next company makes something that powers one of the fastest growing industries in the world, and most retail investors have never heard of it. The drone industry is expanding faster than most people realize, not just military applications, but logistics, agriculture, inspection, and emergency response. Governments across the US, Canada, and Europe are racing to build domestic drone supply chains independent of foreign manufacturers. Every drone has one limiting factor above all others. Not the motors, not the software, the battery. Battery determines flight time, range, and payload. Build a battery that meaningfully outperforms everything else. Better energy density, lower weight, longer range. And every serious drone buyer in the world wants it. The company is Emprius Technologies, ticker AMPX. They do not build drones, they build the advanced batteries inside them. The technology is validated. Real orders exist. In 2026, they have shifted smartly to contract manufacturing, partnering with producers already cleared to supply the U.S. government. That clearance opens the door to defense contracts with serious revenue scale. Analyst targets are pointing to $18 to $20 per share, nearly 100% upside. Earnings drop early this month and the setup looks strong. Share this video with someone who needs to see this. It helps Market Authority keep growing and keeps this content free. Now we move into the two most established names on the list, both tied directly to the AI hardware trade, the part of the AI story most retail investors are still underestimating. The first is a memory chip company. Most people think about AI and imagine the software, the chatbots, the assistants, the image generators, but all of that software runs on hardware, and one of the most critical pieces of that hardware is memory, not regular memory, a high-speed, high-capacity type called high-bandwidth memory, or HBM. Every high-end AI processor deployed today requires multiple stacks of HBM to function at full capacity. Without enough of it, even the most powerful chip in the world slows down. The primary global supplier of this memory is Micron Technology, ticker MU. Here is the supply and demand reality. HBM is sold out through the end of 2026. Early signals point to it remaining tight well into 2027. When supply is this constrained, companies gain pricing power. Micron is not just selling more chips. They are selling them at better margins. Revenue is growing. Profits are flowing. Free cash flow is building. The chart recently gave a technical breakout signal after a period of consolidation, a continuation pattern suggesting the trend has more room to run. Longer term, every data center built today will need upgrades in 3 to 5 years. Every new generation of AI architecture will demand faster memory. Micron is developing HBM4 and beyond. This is not a one-cycle story. This is a company embedded in the long-term infrastructure of computing, generating real cash while it grows. And finally, the number one stock on our March list. This company sits alongside Micron in the AI hardware ecosystem, but is playing a different angle, and its biggest catalyst is still ahead. For 2 years, one question dominated AI investing. Can anyone actually compete with NVIDIA? For a while, the honest answer was no. NVIDIA had everything: the chips, the software, the developer relationships, the market share. But 2026 is the year that answer is changing, and the evidence is in signed contracts from the largest technology companies in the world. This company is launching a chip lineup that directly challenges NVIDIA's best AI systems. Not incremental improvements, a fully competitive architecture for enterprise AI training and inference. OpenAI has committed. Oracle has committed. Meta, one of the single largest AI spenders on the planet, announced plans to deploy a massive quantity of this company's hardware beginning in the third quarter of this year. Meta had already signed a major deal with NVIDIA, and then within days made a comparable commitment here. Companies the size of Meta do not diversify AI chip suppliers out of courtesy. They do it because the product is genuinely competitive and they need reliable supply. That company is Advanced Micro Devices, AMD, with the MI450 lineup and Helios rack-scale platform ramping through the second half of 2026. Analysts are projecting revenue growth reaching triple digits, sustained for multiple quarters. Consensus price targets point to over 30% upside. The most bullish targets suggest 75%. Those estimates were set before the most recent customer announcements. Every new deal between now and year-end is an upside catalyst not yet priced in. AMD is our number one pick for March 2026. Here is the quick recap. Illuma for early photonic semiconductor exposure. High risk, high potential. ALF Beauty for a quality consumer brand at a margin of safety price after an emotional overreaction. AMPX for the drone battery story approaching a major catalyst with nearly 100% analyst upside. Micron for large-cap AI memory exposure with real free cash flow and structural long-term demand. And AMD as the single most compelling growth setup in large-cap technology right now. The thread connecting all five is the same mindset. Understand the business. Buy below its long-term value. Think in years, not weeks. Hold through short-term noise when the thesis is intact. Free cash flow, margin of safety, patience, discipline. These are the tools that build real wealth. Not hot tips, not chasing what already moved, not emotion. If this video gave you real value, share it with someone serious about investing and explore the other videos on Market Authority for deeper research on all of these names.